I'm gonna bring in Patrick from Bad Charts. Patrick, good morning. Happy Tuesday. Happy Turnaround Tuesday. Welcome to the Face Show. How are you?
Hi, Blake. Yes, I'm doing great. What was that? A turnaround Tuesday? What? I've never heard that expression before.
Never, never. Yes, today is It's Mutual Fund Monday and then Turnaround Tuesday. And matter of fact, it happened to be end of month Monday, and which we saw a nice little boost
Ah,
in the equity markets at the end of the day yesterday as those end of month flows came through. And now we get Turnaround Tuesday. So what say you? Do we actually get a turnaround in the markets?
well, yes. It's all that question. It's all about time frame, right? Because I see, like, I used to do like you guys. Well, 4 hour, 8 hour candle charts. Uh, but when you zoom out, then you see the bigger picture. It takes a lot to turn around a market, like from a macro cyclical or secular type of move, right? And what's good about yesterday, it was not just a monthly close, it was also a quarterly close. So for me, the most important dates for traders, well, their monthly closes get 12 a year, then the quarterly closes 4 a year, the semestrial closes, the one that the second quarter when it closes, and then the most important trading day of the year for me is the last day of the year, because then you get annual yearly closes, and that removes a lot of the noise, and you really get to see the bigger trends in play. And why that's important is the shorter time frames. Sometimes, of course, you could zoom in. That's like Inception. You could zoom in and you could play ups and downs. But if you don't have a view of the bigger picture, then let's say you're trying to short in an uptrend, you're playing counter movements, right? They're riskier, right? At any moment, like you said, those capital flows could come in at the end of the month. The pension funds, the mutual funds that had their plan buying, right? As let's say they start buying at the wrong moment when you were trying to short something that looked bearish on your smaller time frames, you'll get the rug pulls. So I would rather, if I know that I'm in an uptrend on the yearly chart, the quarterly chart, the monthly chart, then what I'm going to look, instead of trying to short that, I'm going to look to buy corrections that end. So bull market, corrections, wedges, whatever that's lets the price consolidate on those higher time frame moving averages, and then I'll play those bounces off the longer term moving averages. I don't know. Should I share a chart? Could I share my screen? Maybe.
Absolutely. So,
Uh,
tell us a little bit about as you're going to do this. Tell us a little bit about your thoughts as we head into this election season. I mean, we are obviously very. I'm assuming you're in the U.S. Is that incorrect?
no, I'm in Quebec, Canada.
Okay, so you're in Canada. So how are you viewing this U.S. Election season from the north?
It's for me, it's like popcorn season. It's drama. I love I love the way you guys do politics. It's crazy. It's like so much more fun than what we have here. Here it's like, oh man, it's like it feels like we've had our prime minister like for ages there. But yeah, no, it's a big drama show there you guys are having there. So from a charting aspect, from a chart trading aspect, I don't really care about elections. I know there's it's about like that seasonality charts. You often see that it says like people they cut out the price and then they say they take all the January months, all the February months, and then they say this is the average gains over 50 years on January. Or some people do that on the election years, right? Each time there's an election year, on average, the market has moved X amount, right? But that's kind of you can't trade off that, because if you're in a secular bull market and it happens that the election is in a secular bull market, then there's higher chances that even if it did go down previously on election years, it has a higher chance of going up, or just the inverse. Let's say you're in a secular bear market and it's an election year, like all the narratives, they're not going to let the market crash and they're going to do whatever they want. But then if you're in a cyclical bear or secular bear, then what do you want to do? You have more chances of that year being not tracking that statistic. So it's all fun, no coffee table discussions, all that, but is it tradable action? Like in my weight of evidence approach, will I consider that? Maybe, but it's really like really far down the ladder of actionable intel. It's like, okay, but you can't rely on that because I've seen so many people. I can't trade gold in whatever in August, or the expression. What is it? Sell in May, go away. No, what that? Oh,
Yes.
is that it? But what happens if you're in a secular bull and you're in an uptrend and or there's breakouts confirmed on the monthly close of May? Are you going to step out of the stock market and when there's crazy breakouts because that old adage is there? It makes no for me. It's just like it makes no sense, right? It's like people will remember the times that adage did work out, but they'll dismiss and they'll forget all the other times that it didn't work out, right? It's like we always seek bias confirmation, like let's say I respected that adage, I didn't play the markets, then I'll just try to remember the times that played out in my favor. But let's say the markets did rocket, I'm just like, my brain's gonna dismiss it, right? Like we always, it's like a human uh, reflex, right? All our bad memories, we try to, to just forget them, right? You drank too much alcohol, you did some stupid stuff at a party, right? Your brain's gonna, it's like a self-defense, the defense mechanism, right? It's gonna try to forget that time. So if you're really trying to be objective and unbiased, then the best you could do is just stick at the charts, get respect your framework, and forget all that sideline stuff there. Because even I know I'm rambling on, and you're letting me ramble on. Usually Dale interrupts me when I go on these rants.
Well, I'm about ready to, so don't worry. I'm about ready to get there. Here's because I don't want to look. I'm gonna say a few things. You may or may not agree. But I've traded for about 30 years, and I've when I originally learned how to draw Fibonacci's was with an actual protractor on charts that I had to print out back in the mid 90s, and so I'm all about being a technician and understanding where the framework is and understanding where price is going, which I do believe is important. But if you don't have a basic understanding of what is driving price, it's kind of like driving with one eye closed down the road or down a freeway, going 150 miles an hour. So
Yeah.
I like to confirm what I see on the map in charts by what might be whether it's a macro or different driver. You might call it
Yes.
noise. I call it probabilities.
Well,
And as traders,
uh,
especially those of us that have traded for funds, and we have quarterly runs where we have to make money each quarter, and then we're back at a high water mark, and we have to make money. If we don't make money that quarter, we don't get paid for another quarter. We have to stack probabilities in our favor. So, I don't want to interrupt you, but there are some things that I might not necessarily agree with what you're
well,
saying.
look, I started off, like everybody, have some money from my spare money. Then after that, I Google, invest. And then of course you always find the penny stock forums, that never talk about risk and money
I
management.
never I never did the penny stock
I
forums
know,
because usually penny stocks are penny stocks for a reason.
but yes, but I'll get to where you are. Then after that, I went down the fundamentals route and I tried to figure out, whatever price to earnings. And then I would go into all this the macro narratives. Then, of course, after that, I read Stan Weinstein's Secrets for Profiting in Bull Markets. And there was a chapter in there at the beginning that resonated with me. And he said, in the 80s or late 70s, the fundamentals, like the narratives around casinos, was terrible, just terrible. Nobody wanted to touch them. But he was looking at the price chart. The price had been consolidating, whatever, big base, starting to curve up, breaking up above resistance, above a 10-week, 30-week moving average. And says, look, everybody, no, there's no attention, right? Because often when there's attention and we start talking about stuff, it's because something made us happy. The price went up. Then we start talking about it. We talk to our neighbors, and then the expression, tips are for waiters, or when your barber starts talking about something, it's not talking about it because it's in the basement or it's been basing for 10 years and just breaking out. He's going to talk about it because he heard somebody that made money, right? But about all this, the narratives and like what moves the market, let's say not the price, like what moves the market, but we don't know, like we think we know, but let's say we do know a part of it. it's, let's say you have analysts, researchers in your firm. Okay, we think this is going to move because the Fed's going to do this, or there's a supply shock in the oil sector, there's an embargo. Okay, all these things. That's what you do know. But if you're really, really honest with yourself, you got to say, there's something I don't know. There is, of course there is, because you have 10 analysts, 100 analysts, but how many analysts are there worldwide? There's thousands of analysts out there, right? You have the American, like let's say you're analyst, but maybe there's a guy in China or in Russia, or maybe there's an Arab sheik that he has the opposite position of you, right? You always think from your perspective, but there could be somebody else that's going to take the opposite position, right? Because if everybody had the same
There
position,
always is. That's what makes a market.
exactly. So the price, when you see the price chart, you're an analyst. You decide to buy $10 million. There's another analyst. He buys 15 million. There's another analyst. He sells 30 million. The aggregate of all market participants, all of them, all these analysts, everybody who has a reason to buy or to sell, all of them. Guess where I see the result? I see in the chart. If the price is trending above, forget all these the lines there. If the price is trending above an inclining moving average, that is mathematically, objectively an uptrend. That means the price keeps going up, the moving average keeps going up. I'm in an uptrend, no matter what the reasons. Let's say in this bull run from the 1980s all the way to 2000 for the US stocks. This is a yearly chart, guys, for the SPX. I'm sure at any of these moments, it was crazy narratives in one way or the other, depending on which side, what's the components of your analysis you were looking at that was coming in your research at that particular moment. Some weeks, maybe you got some bearish elements, some weeks you got bullish. And then after that, of course, all the other analysts are doing their stuff. Then they're recommending their funds to buy whatever they're buying. But at the end of the day, the chart, there is no lie. The chart is the fundamentals, and it's even
Right,
better than it's
but
everything.
I want to ask you something. When you're looking at a chart, just like I look at charts too. Everything that I'm going to do from a charting point of view is I'm going to say, well, I'm buying here because I have the highest probability, lowest risk versus reward. I can stack it in my favor. That's where I want my entry point's going to be. But if I could throw in additional reasons why I should be buying there is for this narrative that is behind the market, wouldn't you want to do that as well?
No, I'll tell you the trap of that. And this is the trap of let's say the gold bugs in the 2000s, right? I'll put up the gold chart just to show you guys. I'll put it as a backdrop. In the 2000s, the narratives always looks most bullish. The story always looks most bullish at the top. So I remember back here, let's say I have a narrative for buying. Okay, let's say I buy gold. I think, let's say in 2000, whenever I decide to buy gold, because I don't trust the central banks. I don't trust the Fed. I got to protect myself against purchasing power. Okay, that's my narrative. I looked at the chart, let's say, or I didn't look at the chart, and it was a breakout. Price goes up, and then it reinforces your narrative, your story. Oh, my narrative is making the price move, not the aggregate of all the different narratives. You start to believe that it's your narrative that's moving it. But what happens when the price starts breaking down? Like, let's say here, it started breaking down and the narrative has not changed. And at the opposite, it probably looks the most bullish. 2011, I think the Greek banks were failing. Italy was failing. Europe was a catastrophe.
Oh, I
And
was
then it started,
broadcasting live, and I'll tell you exactly why I sold it there.
yes, yes.
Yeah, but yeah, I'm here.
But
Uh,
sometimes you get lucky, but a lot of people, they bought here because of the narratives, right? But the price is breaking down. The market is forward looking. The narrative that you have today, unless like you're really able to discount it in the future and you think that the market is not as smart as you and they haven't figured it out before you and start pricing it ahead of you, then you're one step behind. If you listen to CNBC, you're one step behind. If you listen, unless you're like a true insider with really some intel that's really like in depth and forward looking, like 6-7 months, you're going to be behind the curve. Where you'll never be behind the curve is the price. Never, because the price is what's happening right now. No matter what the reason why gold failed here and didn't recover, right? It could have
well,
recovered. I'm sure some
price is
people,
the ultimate judge and jury in the markets.
yeah. Look, if I had a narrative here, it broke down. I could have said, oh, it's an around the apex move. It's a false breakdown. It cannot break down. And then I hold on. But then I hold on. Oh, I'm losing. I'm losing. And then what do I do here? And I'm probably going to sell at the bottom here. I'm going to capitulate when everybody else, when that thing starts basing. But then after that, when the price starts going back up, I won't believe it. I won't believe it. Look, just believe the charts. You cannot make money if the price does not go up and away from your entry point, right? You just cannot.
Yeah.
So, and there's opportunity
it's
cost.
funny that time frame. There's a lot of people that are listening on this show that probably listen to my show over, in that 2011 time frame when I actually had to talk a friend's father off the ledge of and putting his whole IRA into gold at that point. So that was my sell indicator. So yeah, it's interesting.
Yes.
So Patrick, what you're basically saying is you only follow price. Narrative doesn't matter.
Yes, it's noise. It's 100% noise. I love talking about it. A lot of our members, like, they need the story because look, I'm a chart geek. I'm like, maybe I don't know if I'm super analytical, and for me, just looking at the price matters, but people, they need a story. They need to tell their wife a story. Why did they put 40% of their income in gold or in uranium stocks or in Tesla? You need a story. That's what Elon Musk sells, or they sell people. They sell you stories. It's much easier to sell a story that hits an emotion chord than to sell a price chart, which is super boring. It's above an inclining moving average. What? Try to explain that to your wife why you put your money in there. Try. She's gonna say you're crazy, right? She's not going to understand the reasoning behind it. So stories, sometimes, as a pure chart trader, I go on a war on Twitter sometimes against fundamental guys. I shouldn't do it. I should just focus on what I'm doing, but it's because I'm fighting the CNBC machine. I'm fighting the human nature. That's why we're terrible chart traders. Humans, we're terrible, I won't say chart traders, but we're terrible traders because we're not built, our emotions are not built to buy when nobody's talking about it, right? We're going to wait until there's gains, and then after that we're going to buy when you're stretched. Here's my super indicator, Blake, there. I love that stretch from the moving average. At the bottom, I'm stretched from the 36-month moving average. That's that red line, right? And look how stretched you are. Look from a statistical point of view. Most of the data points here, the 1970 blow-offs, but from a statistical point of view, there's more data points below that red line, right? It's resistance. You could do that on any chart than above, right? So whenever the price is getting closer here, it doesn't mean it's a top, but you're in outlier. You're in outlier territory, right?
What moving average do you have up there?
That's a 36-month, and and at the bottom pane is a distance from the 36-month.
Yeah. Okay.
So it's super. I don't use a lot of indicators. The better the chart trader, he needs less and less indicators. But this one, it's pretty close. It's not fancy math off the moving average, right? It's just like a good chart trader could see when prices stretch, right? You could see it visually here, right? When the price is above. But when you see it on a chart and you draw resistance on an indicator which measures that, it makes it much easier for somebody who's just starting out. And I use it all the time. So I know gold or any chart, we could have done this for anything. Once it gets here, look, there's not much room left, Blake, for gold to run there from the moving average. There's
wait. You're not gonna double up and go quadruple long here?
No, because you know where the lowest entries are? When you're coiled and tight. Look at here, down here, coiled and tight. It doesn't mean you're breaking out going to the moon, but if it's coiled and tight, that means nobody's been talking about it. It means it's been basing, because for the moving average to be coiled and tight to the price, you need a base. That's why, the most beautiful chart patterns are bases with a horizontal breakout line, whatever, inverse head and shoulders, double bottom, a box, a rising triangle, whatever you want to call it there. But they're coiled and tight, price higher lows, price aren't doing higher highs. And once you break out above that horizontal line, what you're actually doing is you're having a new higher high. So higher lows plus higher highs, that's the definition of an uptrend, right? So gold, there's no entry here. If you're in on the monthly chart, you just ride it until the momentum, as soon as it's begging for consolidation. Like there's a pull flag that's imminent. Like but you still have to wait. Eventually there'll be some type of flag here, halfway patterns. You see them all the time, right? That's the building blocks of any uptrend is pull flags, right? But either via pennant, an expanding wedge, but that's what it is, right? It's explosion and move, consolidation, letting the moving average catch up until one day that consolidation pattern becomes a top, and you'll only know it in hindsight. So
So
this is what I like to say is all bull market tops start with a bullish looking consolidation pattern that fails, but not all bullish consolidation patterns that fail are market tops. So this one failed. It did become a market top, but if it would have continued, it would have been crazy. But you were stretched from the
so
moving average, you know.
so let me ask you this. I know you don't pay attention to, well, I guess what's going on or how, economic data, but does your positions, do you care that there's that we have non-farm payroll this
Yes,
week?
yes, yes. 100% I
Okay.
care. You know why? If I can chart it, I'm fine with the data. So what I do here, I put in my tagline, I call it chart defined macroeconomics. So instead of me having a narrative defined on what the macroeconomics are, I know like well, supply and demand, of course, but all the macroeconomics. What I do is okay, I'll look at the evidence. I'll look at what the aggregate of market participants are telling me what the macroeconomics is. So let's see. Well, hold on. I'm just going to get this one here. Okay, it's kind of fuzzy. Here I have the unemployment rate. See, that's that's an economics data series, right? So I do care, but I'll do some TA on it. I'll do some analysis, and then often I'll see what correlates with it. So don't confuse, guys. The causation, I practically don't care, but I do care about correlation. Even if it's bananas that correlate to a chart of unemployment, of course I care. It's correlated. If I could play bananas going up, I'm not smart enough, or I know I'm not smart enough to try to identify the cause of why there's a correlation, and I don't care. I just want to make money. So the cause, people could have fun. Because imagine if this is another thing about like fundamentals and others. What if there's no apparent cause, but the price is tracking another instrument correlated and it's breaking out? Am I going to refuse to play it because my brain can't wrap myself around the story of why it's going up? Sometimes sugar was breaking out. Some people tell, well, it can't be going up. There's a surplus of sugar. Well, what do you want me to tell you? The price is going up. Like there must be something, right? There's something that you don't know that's making it go up. So here I have unemployment rate. And here I have at the bottom, I have the 7-year rate of change, that blue line. And and then I have the ASA chart. The ASA is the gold and silver miner index since 1968. Not all the time. Again, it's like about probabilities, right? But I know that often when the unemployment rate bottoms and starts turning up at this angle of ascent, the miners, that's when they have their best periods. There's other elements. The gold to SPX ratio loves turning up, and often, and I haven't seen it when the unemployment rate goes up from this low to this much high at that angle. It rarely. I haven't seen one occasion where it doesn't double at least the unemployment rate. So if people are wondering, like often people, I often do like financial spaces every Friday, and they don't understand how come the Fed's cutting. The initial claims aren't that bad, and they're spinning what they see the data. But then when I look at this chart, then I say, okay, well, the Fed must be looking at stuff that people maybe don't know where they're looking at, or they're looking at other stuff. But this is probably spooking them there, that the unemployment rate, they see the angle that thing's rising, and it's going to at least double from wherever it is now. And that's like probably one of the reasons additionally where they could decide to keep cutting rates. So even me, sometimes, I fall into the trap of, I could attach narratives, but as long as they're backed by the charts, it's fine. But again,
Well, that's exactly what we were talking about earlier. It's like, yeah, you have a narrative, but as long as it's following your price narrative, your price breakout, doesn't that just increase the probabilities of you
well,
making money if you can have your narrative
well,
match
no,
what price is doing?
but what if I'm wrong? What if I think my narrative is
We're always
moving
going to be wrong.
But
We're
so it's
not
use
gonna,
so it's use
I'm wrong at least half the time,
but
at
not
least.
for the trades. Yeah, for the trades, like me too. Like it's all about risk and management, right? I'm right less than 50% of the time, but because my trades yield 3-to-1 risk to reward, it's mathematically, over time I should make money. But what I'm saying is the narrative. If like, see, I attach a narrative to the chart I just showed you before. But what if it's not even that? What if it's something else that's the cause of why they're correlated those charts? Isn't that dangerous? Isn't that dangerous information? I'll sleep well at night, but it's like
Well, as long as
superfluous.
price is moving in the direction you are forecasting it, then
That's fine.
isn't it going to help you sleep better at night?
If I have a narrative and if the price moves in the direction that I want, I'm happy. If there's a narrative
Right.
and the price and the narrative goes in direction, it's a double-edged sword. It might make me feel good, because I'm still a human and I hear stuff. Okay, silver has to go up because there's solar panels and stuff like that. Whatever the narrative, even in the bear market, that narrative is still there, but people just dismiss it, right? It's because, like, in bull markets, uh, even bearish news is spin positively, right? You know how despite bad earnings, Tesla goes up. In the bull market, you'll hear that, right? Or in bear markets, despite good earnings, markets frown upon that, and the price goes down, right? So if I have a narrative and it feels good to me and it seems reasonable, and I start attaching to it, I'm opening myself to getting trapped later on if ever
Well,
the
but
if ever the
if
price
you're
doesn't go in my
but if you're watching
direction.
it, but if you're watching your charts and you're using your charts as your guide, then
I'm fine. I'm fine. I'm just
there you
saying
go.
it's
Okay.
dangerous because I'm opening a door to something that might make me take an emotional decision. And that's why chart trading is hard. We fail because often our emotions interfere with our trading framework. Like, you got to be a robot
Yeah.
to close everything out, right? You got to be some type of, autistic on the spectrum. Like, you have to be, it's hard to be a trader because you have to,
Oh, I think we're all on the spectrum, Patrick. All of us.
we have to, right?
Yeah, we have to be. Hey, listen, we're as
All right.
far as time goes, we've got to get wrapped up because we've got to head out to our ForexAnalytix subscriber show. But it's been an interesting conversation. I look forward to actually having another conversation with you the next time Dale pops in. But I'll stick around and make sure we continue this conversation. Patrick, what's the best way for traders to follow your work?
Guys, go on Twitter, X Bad Charts One. Of course, I have a website, northstarbadcharts.com. It's behind a paywall, but we just have so much time to help and answer people on Twitter. So if you want special attention there, go to the website.
All right. Well, hey, I appreciate you being here, and like I said, I like your longer term framework, and I do agree as far as there's nothing that changes narratives, and I said this just before you came on about maybe 15 minutes ago. There's nothing more that changes the narrative than price. You get price going one direction, narratives are going to change no matter what.
Yes.
So that's the bottom line. So I'm with you as far as that goes. So Patrick, it's been nice chatting with you, and thanks for gracing us here on the Face Show with your presence. We do appreciate you.
Thanks, Blake. I hope I wasn't too aggressive there in my philosophy there.
No, hey, you know what? I love it. The
Cool.
thing is, when we trade the markets, you got to trade by your own tune, and there's a lot of different ways to slice and dice this market. As I always tell people, it's my way isn't necessarily the right way. It's just the way that I do things,
Yes.
and finding a trader or a way of trading that jives with each individual trader. That's what half of this game is about. So Patrick, thank you so much for joining us, and I know Dale's going to circle back around with you when he gets back from out of town. He has apologized. He had to step out for a last minute trip. You're muted.
Yes. Thank you, Blake. I appreciate you guys. I love Dell, and it was very fun there talking with you, Blake. Really
All
appreciate it.
right, same here. All right, guys, and I want to thank you all for being here with us today. Thanks, Patrick, for joining us here on the Face Show. And remember, catch Ryan on the Flow Show every European morning. I think K-Man's going to be back on Thursday this week. And good luck today trading through the ISM data. And then don't forget, we have JOLTS data coming up this morning too. For those of you in the ForexAnalytix community, I'll see you in about 10 minutes on the morning edge. All right, everybody, have a great trading day. See you tomorrow if I don't catch you there. Bye-bye. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.